Kovacevich on whether Donald Trump is right. Thanks for joining us. Should we be getting out the market?
Well, I think the market is fully valued. There are certainly stocks within the market that may not be, but I think all the asset classes are actually, some are actually overvalued, like bonds. And the stock market is fully valued, and I don't think you should be adding to your any of your asset classes at the moment.
So, but for the average person out there, doesn't it get a little tricky when they hear someone as sophisticated as you or Donald Trump say, get in right now, get out right now? And in other words, is it smarter to stay the course, or is it wise to get out when you anticipate something going wrong and maybe be wrong? Because we know a record amount of people sold in March of 2009 when they should have been buying.
Well, I don't think you get out completely of the market. I'll just tell you, personally, in the last 2 months, I have simply sold stocks that I thought were overvalued and kept it in cash. And for when the stock market goes down, I will use that cash. But I am still very much into the market. But I'm just saying there's no reason to increase your exposure. And if you do think that there are stocks or whatever assets you have that are overvalued, yes, I would be selling those at the moment, keeping cash, and then have that available should the asset classes fall.
How worried are you? Donald Trump brought up interest rates going up of some kind of spike in interest rates, because you know, we have a lot of people who come on this show and they say, well, the market's up because nothing else is working out, when in fact the majority of money that's fleeing other assets are going into bonds. In fact, last month, $43 billion into ETFs that cover bonds, the most since 2014. Does that suggest that interest rates are going to be relatively low for as far as the eye can see?
Well, it's certainly possible, but I would bet a large portion of that $43 billion is from foreign markets, where there are negative interest rates. I don't know how much of that is really domestic. I certainly would not be putting my money into bonds because the bond rates are being manipulated by the government. This is not a free market by any means, and the government and the Federal Reserve can change their mind at any time. If it's based on fundamentals, you have some ability to anticipate whether it's over or it's under or whatever. When you're dealing with bureaucrats who can change their minds at any time, it's just too risky to be in, and I would not be in the bond market.
On that note, we've had some better signs, consumers are spending, and some signs that maybe wages are going to go up. We get the jobs report on Friday. Let's just say it's 200,000, which would be above the estimates. Does that put any pressure on the Fed to act now, or do they sort of keep their powder dry, in part because they don't want to act before the election?
No, I think if you get job reports in July and August at anywhere close to 200,000, I think it is quite possible that they move in September. They may not, because they tend to be overly cautious. Let me put it this way. They should move in September if that is the case. And then they have the opportunity to see what happens after that and decide whether to do something in December. Yeah. And most people think they're going to do December anyway. So you might as well do one in September, and it gives you the option to either do another one or stay the course.
Well, we talked about these.
If you get 200,000, I think you'll see a rate increase. I hope you see a rate increase.
You talked about these bureaucrats who can change their minds at a whim. Janet Yellen and company raised rates in December of last year. We started off with the worst stock market in the history of mankind, and it looks like Janet Yellen blinked. What's the stop? I mean, does she have the ability to go ahead and actually pull a trigger on a small rate increase that could tank the market, influence the election, and have all kinds of people crying at her?
Well, you know, that's always a possibility. But let's say what really happened last year. Everyone thought, because of the data, that she should have done it in September. And she didn't for some reason. I don't know, it was the Chinese stock market or whatever excuse she had. And the market tanked, the dollar tanked. Everybody, you know, was so shocked by her not moving when she says she was data dependent. So she kind of had to make up for the mistake she made in September. And she just loses credibility all the time, because it's not, it's data dependent, but she gets to decide what the data is saying. And most people don't agree with her assessment of what that data is.
Yeah, that infamous dashboard, sometimes the same light that blinks green one day is blinking red the next. Hey, thank you very much. Really love your insight. It's great. It's unbiased, and it's really smart stuff, and we appreciate it.